Yo, hello traders, it's your one and only Forex Q coach, Tim Legend, and I'm super excited having you all here today on this one. Alright, if this is your first time on my channel, could you do me a little favor? Hit the subscribe button, turn the notification bell on so that you don't miss out a single thing. Because right here in this channel, all I do is to post content that help you win in the financial market. So hit the subscribe button and turn the notification bell. Now let's begin. How do you interpret what a candlestick is telling you? Now, for you to be able to interpret what a candlestick is really telling you, all right? Let's go to the 1 hour time frame so we'll be able to see all those things well and clear. Okay, so there is something we always want to identify. We want to always identify where will this move begin or where would it end, okay? For instance, this move began here and it moved all the way down and ended here before the new move began all the way from down here, headed up and ended somewhere around here before the new move began and ended here before it went up, ended here and went down. All right. So when you see these candlesticks, they are trying to tell you that, hey, if you see rejections like this, all right, when you start seeing this kind of candlesticks forming like this, you see this candlestick, it has a little body and it has a longer, a long wick like this, okay? This kind of candlestick is interpreting to you that there is indecision in the markets. Indecision in the sense that the bulls and the bears are not able to decide where they want to carry price to again. When there is an indecision in the market, there is every tendency that price might likely change movements, especially when you see this kind of candlestick. You see this one that has a wick and the body of it is very, very tiny. You see, let me show you. The body is very, very tiny. Either you can slightly see the body, or sometimes you can even not see it at all. All right, that is an example of this candlestick you're seeing here. This one is called a doji. If you have your pen, you can write it down. This kind of candlestick is called a doji candlestick. All right. You must understand that these candlesticks were originated by, it was formed by a Japanese. Okay. So when you hear those kind of names, you should understand what it means. So it's called a doji, explaining indecision. Price was not able to decide if it wants to continue going down. All right. So that was why when this indecision began, the next candlestick also showed some indecision also, but it had a little body, but it had long wick up and down, still proving indecision. And if you notice, the next candlestick that came, the bears tried to push down, but the bulls rejected it. And when this candlestick closed, it formed what we call a rejection candlestick. So this is what we call a rejection candlestick. When you have a body and then you have a longer wick either from the down, okay, this is going to be green in color. If that wick is down, it has to be green in color. If it's like this and red in color, then you probably should see the wick somewhere around here. All right. So when you see a bullish rejection candlestick, it's proving that the bulls are entering the market and they might likely push up. When you see a bearish rejection candlestick, it means the bears are in the market and might likely push down. This is called a bullish rejection candlestick because this market was bearish. Yes, you see these bears were pushing down all the way here before indecision began, and the bears at this time when this candlestick closed, this one opened, the bears tried to push down, but the bulls rejected. That's why it's called a rejection candlestick. Rejection. Okay. The bears tried to push it down, but the bulls rejected it. And that was why this wick formed. Remember when I explained to you how a wick forms? So this simply means that the bears showed up during the era of, this is 1 hour time frame. So it means that within this 1 hour of this candlestick, the bears actually showed up in the market by pushing down for a while before the bulls rejected it and even went higher. In fact, the bulls went even higher to this extent before the bears rejected it a little bit, and that candlestick closed there. So this is automatically marked out as a rejection candlestick. Okay. So once you start seeing a bullish rejection candlestick like this, it's giving you a sign that the bulls are gradually entering the markets. Because the only reason why the bears will continue to push down and push down and push down is because the bulls don't have strength to push up, or the bulls are not in the market, or there is no huge amount of money funded in the forex market by the bulls to push up. And that is why the bears will continue to sell and sell and sell and sell. But we all have to understand one simple logic about marketing. One logic about marketing is that when you go to the market and buy and buy and buy and buy a lot of stocks, all right, by the time your store is full with all you bought, what do you want to do next? You want to sell, right? Good. And by the time you sell and sell and sell and sell out all the things you have in your store, what do you want to do next? You want to go to the market to what? Buy. So that is why you always see the market sell for a while, buy for a while, sell for a while, buy for a while, because you can't continue to sell forever. All right. But don't get it twisted. There are certain times when you will see a whole week, the bears keep selling and selling and selling. This is because huge amount of fund has been funded in the financial market to keep pushing market down. But one day, the bulls will still take power, because one day, all that is being sold will still have to be bought. Okay? So that's one thing you need to understand about how price moves. Because some people would be like, but why is it that we can't just see a bullish candle going up, 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 up? No, it's not like that. It will always go up and come down. All right? It will always go up and come down, because when you buy a lot, you have to sell for a while. Then maybe you buy again and sell for a while. All right? And that's how marketing continues to move. All right? Remember, we are doing Forex trade. So you're trading. Trading is buying and selling, right? Good. So this is the simple logic you need to understand about a bullish rejection candlestick. So it's proving that the bulls have entered and might likely push up. Now, when you see a bearish rejection candlestick, it's proving that the bears have entered the market and might likely what? Sell downward. Okay. Now, you would notice another candlestick here, which is this one. Now, you would notice that this one has a wick, but it has a red body. Now you might likely be asking, but why is it that it has a long wick from beneath it, but it has a red body? Why is that? That is because when the candlestick opened, all right, the bears pushed down. All right. And when they pushed down, the bulls rejected and that wick formed. But the bulls were not able to push it all the way up, even to the extent that they pushed it even higher than before. Because if the bulls had pushed and crossed this zone where the candlestick opened from, all right, if the bulls had pushed up to this zone far above where it's opened from, it's going to automatically turn green in color to prove that the bulls really rejected and even rejected even higher. Okay, but unfortunately, during the era, this 1 hour, all right, the bulls were not able to push and break beyond where that candlestick opened from. That was why when it ended here, it was still red in color. Okay, now, but this candlestick, as you see here, it still represents, okay, it still represents a bullish rejection. Why? Because you can see the wick is very long. Look how long the wick is. So this means that when the bears pushed, the bulls were very strong enough to push massively to reject a whole long wick like this. And if care wasn't taken, maybe if the 1 hour hadn't elapsed, I'm sure the bulls might likely have pushed up and this would have turned green. Because if you notice, when the candlestick finally closed, the next candlestick that opened was still a bullish and a strong bullish one for that matter. A very strong bullish candle for that matter, to tell you that this is a sign that the bulls are likely entering the markets. Okay, so I just needed to understand all the simple logics about these candlesticks, because these are the things when you start trading, these are the things you always want to look out for. Okay, what candlestick is forming? What has formed? What might likely happen next after this candlestick has formed? Okay, so I want to break it down to you guys. Actually, there are quite a lot of candlestick patterns in the charts, all right? But I'm just giving you the most important ones that can easily give you an idea of what will likely happen in the market so that you take advantage of it and grab the money out of the markets. Okay, now this is for single candlesticks. I've showed you about the doji, which is this one, all right, and also this one, and I've showed you about the rejection. Now, but if you notice, they are all single candlesticks. Now let us talk about multiple candlesticks. When you have multiple candlesticks, that means you're using two different candlesticks to monitor the market. Okay, now we have what we call, under two candlesticks, we have what we call the bullish engulfing. All right, now a bullish engulfing is usually like this, and it's going to be green in color. All right, a bullish engulfing is a candlestick whereby the bullish candle is longer than the previous bearish candle. This when you see this kind of candlestick form on your charts, it's giving you a sign that, hey, the bulls might likely take power soon. All right, that's what this candlestick means whenever you see it on the chart, and it's called a bullish engulfing. Simply means that the bullish candle has engulfed the bearish candle. Another for the bears is what we call what? The bearish engulfing. And that is when you see a longer candlestick, but is bearish in color, is red. Okay, when you see it like this, the bearish candle engulfed the previous candle. So you call that what? A bearish engulfing candlestick pattern. When you see it on the chart, it signifies that, hey, the bears might likely take power soon. So maybe if you are buying and you start seeing this pattern, it's giving you a sign that, look, you should likely be taking your profit now, or you should likely be locking your profits. All right. Now, these are the few candlesticks that I can explain to you for now, so that you don't have to crack your head with so much, because there are many of them. If I start quoting all of them for you here, you might likely get confused. Okay, but I just want to give you the simple ones and the ones we see quite a lot of times on the charts. All right, there's one I didn't talk about, which is called a dragonfly doji. Remember, this is a doji. This is also a doji. There is also another one called the gravestone doji. Okay, this is how it looks. And there is another one called the dragonfly doji. And this is how it looks. Okay, it has a very long wick and a small head. Why this one has a long wick and a small bottom? This is called what? A gravestone doji. Why this is called a dragonfly doji? Dragonfly, everybody should know what a dragonfly is. You know, that thing that looks like this. It has a wing. That's why it's called a dragonfly doji. Okay, so when you see a dragonfly doji, number one is signifying what? Indecision, because it's a doji, indecision. And number two, in the midst of that indecision, is also trying to signify that the bulls might likely take power. Why? Because you can see how the bulls massively rejected, and there was a very long week only for price to close here. So the bulls might likely take power, but that market is still indecisive, in the sense that the bulls might likely take power, or it might continue going down. When you see a gravestone doji, it tells you that the bears were strongly in power during this era, but that market is still indecisive. All right, let's see if we can spot out a few examples of the gravestone or the dragonfly doji. Okay, I can see one here. This is an example of a gravestone doji. All right, now you can see that when it formed massively, it proved that price was still about to go bearish, and price went bearish. But you can see that when the bulls showed up here with this kind of candlestick I told you about, what happened next? The bulls pushed up. Okay, let's see if we can see any This one is for gravestone. Let's see if we can find any dragonfly doji on the charts. So we can see a lot of dojis. All this means indecision. All right. Now this one is a dragonfly doji. This one means that the bulls really rejected massively. All right. So during this era was an indecision era. You see, between here to here, price was just ranging. There was no definite direction. It wasn't bullish, it wasn't bearish, it was going sideways. And that was why price kept going sideways till they decided, okay, let's keep selling for a while. Next, they started ranging again. All right. So that's that for candlestick patterns that we should understand.
Please hit the subscribe button and turn on the notification bell.